So this is the video for my strategy, or not really a strategy, just the concepts I use and basically how I use them. So the first topic, the first thing I use is auction market theory. Um, I think the basic understanding is pretty simple, but it differs in the ways that people use it, and I use it in a quite specific way. So let me show you how I use it. So the first thing would be understanding how it works. There's a million videos on YouTube, TikTok, and platforms um, on explaining this topic, so I won't get very deep in it, and I'm sure you already know it, Nick. So in this scheme we have it drawn out pretty nicely, even with the volume profiles. So people in the market always search for the ideal price for them to either sell or buy. So this was a price that people agreed on. So this is called fair price. And right here you can see buyers no longer accepted this price because it was too expensive for them. So when people stopped buying, sellers took over and dropped the price down to this range. And here we created a new fair price. Alright? So right here people agreed, but then all of the sellers that agreed on this price stopped existing. So right here it was too cheap for them to sell, and they let buyers take over and create a new balance, new fair price. So right here I pulled up a chart of micro ES. Um, Actually I have some drawings on the normal ES, so I just pulled up this one. But right now I will try to explain how I use auction market theory. So right here we have a 30-minute chart. That's normally what I work with when I'm marking out my fair price zones. So what I do is I take a volume profile, this one. It is for free on TradingView, and right now I'm just looking where did price consolidate. That means where did buyers and sellers agree on a price. So right off the bat we could see this is the best example. Right here buyers and sellers agreed on a price for a pretty long time. So I just go and mark it out. Alright, we have this volume profile. And right now what you wanna do is look at the area where buyers and sellers agreed the most. That's called, let me pull up the settings. That's called um, like the fair price, but the top is value area high and value area low. POC, that's the point of control, and that is where the most volume was traded. So this is a zone that you know that buyers and sellers already agreed on in the past. So you know this could be a fair price for both of them. Then after you mark out this one, you can go and mark out another one. For example, that would be this one. Right. Then you can go and mark out this one. And this one. So these are your zones, and right now you have to make something of it. You have to give it meaning. So what I do is when I go down to the 1 minute time frame, I look at, for example, this zone I marked out, and I say, and for example, if we were here, alright, When price is inside the value area high and value area low, there's a 80% chance that when it's at the low, it will go up and hit the high, because this is the fair price for both of them. So we can kind of trade them as support and resistance. So right now you are here and you check for all of your other confluences like order flow, higher time frame perspective, and all of these things, which I will talk about soon. So you are here, you check your order flow, for example your heat map NIC, and you see this, and you see a great absorption here. So right now you can be pretty sure that the price will reach the top, the value area high. So right here you would enter with your stop, I don't know where right now because I do not have the levels and order flow, and you can target this value area high. Be very careful with these trades because there's a pretty big chance it might start consolidating or even reverse on the point of control. That's another important level. But you get me, you get the example. You can trade like this. Um, Also, C. Bracken posted a trade, I don't know when, maybe yesterday or a few days back, where he took this kind of trade, where the market was pretty balanced. It was it was pretty ranging. So he had a like P profile. The day had a P profile like this. Um, Alright, and he was trading and he noticed that the price hit the value area high, and then he sold. So that's the first example of what I wanted to show you on the volume profile. So another thing, when price exits your zone, when price exits your zone and is, for example, like here, all right, you see this, what you can tell by that: sellers didn't accept this price anymore. Alright? So buyers pushed up. And then some sellers took a position because this was an acceptable price for them at the moment. So right now price is dropping back to this area. But what do we know from the past? This area isn't acceptable for sellers anymore. So it can very well become a support. You see, when we come into this zone again, it is very probable that sellers won't accept the price anymore and buyers will take over again. So this would be a good example. Um, Buyers pushed up, sellers accepted, went down again. Sellers rejected, buyers took over. Sellers rejected, buyers took over. And now we come here again and we even tap it one time, but sellers completely reject it. So if you would have placed your position like this, you could have safely played it. Alright? So now we know two scenarios. Market is range bound, is ranged, and we can trade in the value area. Because we know there is a high chance the price will consolidate in this on the higher time frame and can even put a little trend in the lower time frames, like here. But then you say, alright, but why is the market like not moving only sideways then, if this is true? And I will explain this in a moment. So let me just take the rectangle tool. Alright. Oh, jeez. Alright. Let me take this. Okay, so we know, we already marked it out previously, that this zone is a zone that sellers and buyers agreed on. And when buyers and sellers don't agree on a price anymore, they are trying to search for a new fair price. We can either create a new fair price or we can come to the previous one. So, as you probably remember from the scheme, they came back down into this zone and we were just dumping, 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 and when we came into the zone, it was a time for a decision. Is this a fair price for both buyers and sellers? We were consolidating right here and we tapped into it like heavily 3 times. In these 3 times, you should have been watching for absorption. If you've seen absorption, you would have entered because this wasn't a fair price for sellers. It was too cheap to sell. They wanted to wait for a higher price. So they waited, and then the market gave them a more fair price. But if they would have been to just flush straight down, maybe here to the point of control, and they then come back here, buyers and sellers would have agreed on this, but they didn't. They rejected this new price, so it wasn't a fair price for them. So you could have expected them to buy, not buy. You could have expected the market to go up. All right, but don't. This is not a 100% like scenario. It didn't have to happen. It could have just they could have just accepted this price, and we could have became range bound again. But that didn't happen. We rejected. So it is always about finding the previous fair prices and then trading inside them or trading the imbalances that happen outside of these. I hope this is somehow understandable, and I'm gonna move over to the next concept. So the next topic are volume profiles. I'll show you how I use them in my trading, but I'm pretty sure you know many ways how to use them already because you watched the bootcamp, but this is just the way that I use it, and I'll quickly show you. So, I've already shown you the first way I use volume profiles. I find previous fair prices, I mark them out with volume profiles and use their value areas. Value area low, high, and POC. Alright? That is the first way I use my volume profiles. The, the another way is that I use a weekly volume profile. So I just go in the daily chart and ask myself, what day is it today? Alright? So the answer for me right now would be it is Tuesday. So it is Tuesday, and I go and I found the previous week's Tuesday, and I just tap. And this shows me the volume profile of this week. It is also free on TradingView. You already know the concepts of high volume nodes, low volume nodes, and such as these. But with this one, I also use the value area low, high, and POC. And it is really useful because just today we could have caught many good trades with this weekly. You see one rejection, another rejection, another rejection, another rejection. Then we come down, we do not accept it, we tap into it, rejection. You have to give a reserve for these because you know price won't always just reject like right here. It can also consolidate. You just have to wait for the right signal of order flow and other confluences to enter. Alright? But this is the first like way to do it. Alright? Boom. We don't reverse. We are in it. We accept, and we reject it here, and you see what I mean. So that's the second way I use it. But for example, if we were here and the value area would be here, I would still treat this as a good key level. The same as this low volume node. Because if we were here and we started rejecting this price, I would be looking to target this new price. But I would set my partials at this low volume node because I know it is a probable place for us to reverse. We either reverse or go through it fast. So I would enter here, target this, and set my partials here in case we reverse. Alright? So that is another way how I use my volume profiles. And the last one is I use it for daily. So when I get my volume profile, I just go and I mark out the whole day from Europe's midnight. So it's 18:30. I'll just go mark out the start of the day till now. Let me just delete some of these so you can see better. Alright. This. Oh, I marked it out wrong, right? Yeah, maybe, but I hope you know what I mean. You definitely do. So, yeah. This is the daily profile. I'll just switch the color so you can see better. Um, this, 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 and this. Alright. You can see it now. And right now, we can see that we have a range to trade in. Or, if you like, if you would see a trade that looks better on the weekly profile, so if we are here and the weekly would for example be this would be area low and this would be area high, or this would be area high, we were here, you can just see we are in a daily POC. So that means we could get a reverse. We hit the weekly area low, so we could be looking for a for a traverse of the zone and target the weekly area high. Alright, so you would get this trade. So this is the third way I use my volume profiles. So basically it is, the first one is I mark out fair prices, the second is I use the weekly, and the last one is I use the daily. Alright, so this is how I use and see like the volume profiles work the best. And I'm gonna move over to the next concept. So the next topic or concept would be VWAP, and I'll quickly show you how I use it. This is not the most important thing, but it can definitely help you to get another like perspective and another bias for your trade that you can use to maximize the win rate or the possibility that your trade will hit. Alright, so let's quickly hop over to the charts and I'll explain it. So I just quickly deleted all of the volume profiles and boxes I've drawn out just so you could see better. But VWAP, I only really use it as a daily one. Maybe you can do regular trading hours or electronic trading hours or weekly. Yeah, I do weekly sometimes because I like the higher time frame perspective, but the most frequent way I use it is only the daily one. So let me just show you how to draw it out and where to find it in TradingView. All right. So you click on this section where you find the long positions, short positions, and you just go over and pick this one, and you just go find your midnight point and just tap it. All right. So this is my VWAP. I mostly trade with the deviation bands because I find that VWAP rarely, very rarely, maybe a few times a day, crosses the whole thing. Alright, so 1, 2, 3 maybe, but most of the time the deviation bands become a support point, and if not, the POC does. So right now I would expect it if I only looked at the VWAP, that price will come here. Sellers will not accept these lower prices, and we will push here and we will go out of the VWAP. But that is only by looking at the daily VWAP. So this like pick doesn't have to be accurate at all. But that is just the way I use it. So when you look at it right here, you see that price went in, and we rejected those prices. So we went out of this. We went out of there. We went out of the VWAP zone. So I'm just looking at this deviation band, and we come in. We come in here, and right now, if paired with volume profile, with a good narrative of auction market theory, and with good order flow, right now I would just wait for an absorption and look to sell, because we didn't accept these prices. Or maybe we would. We are in this point, so I don't know yet. But when I see we are not accepting these prices and we go out of the VWAP once again, I would take a short. If if paired with other confluences, I never trade any confluence alone. So I just pair all of these and make a good trade, a good strategy. So that is how I use VWAP. I use it daily, and I mainly use the deviation bands. But the other thing is, if I catch a good perspective, good trade here to go short, I could target the POC, alright? But I would not like to target the further points, so the lower deviation band, because as I said already, I do not find the VWAP crossing the whole thing, like that doesn't occur that much. So right here, if I would have caught a short, maybe from rejecting a fair price or previous fair price, or we are just in a fair price and we are trying to reject the value area high, and we are trying to get to the low. This could be my target, or this is the place where my partials could be, and I could target a little lower, but I would not risk it and set my TP here, because we are very probable to get a bounce from the POC, as you could see here, here, and maybe here. We'll see, maybe it will reverse. Alright, so this is how I use VWAP. It is not the most important concept in my trading book, but I still look at it every trade I take, because it can give me a lot of more information and can give me a better trade. Alright, and let's go to the last one. The last thing I want to look at is footprints and how I use them in combination with this like trading tool or indicator in NinjaTrader. But footprints are on deep charts too, so, and I believe they are much better on deep charts than NinjaTrader. So maybe we can go and try to set them up sometime, Nick. But I guess we'll see. But I'll just quickly go over and show you. But I'm not really that confident in showing you this, because after all, it is a little harder to explain than the other concepts I already showed you. So I hope you will understand at least something, and if you don't, we can just pick some videos that you can watch and that you can learn it better from like better people than me, and then you will understand definitely. So let's hop into it real quick. So this is a footprint chart of ES. I use the 1 minute, and I'll just quickly show you. This These are just the sell. Sorry. All right. So these are the buyers and these are the sellers. All right. So um, if we look at it, you can just see the behind of the candles. So right here, we can see that 5 people bought at this point and 0 sold. 104 bought and 50 sold. All right. So this is the thing, and right now I'll just tell you how we can use it in our advantage to see absorption. I will not talk about other concepts because I do not use them and I do not know how to explain them or even how to interpret them. So right now we are coming to your imaginary key level. Alright, I did not look at anything. I did not look if this is a key level. But for example, we sort of here pretty quickly, so I suppose this would be a high volume node or fair price, and this would be a low volume node. So right now we are in a low volume node. Alright, this is just for you. I do not trade low volume nodes that much, so this is just for you. Um, it is quite complicated to work with NinjaTrader because I'm not that used to it. Alright, so we are coming to our key level, and we are looking for either reversal or continuation. This is your key level area. We are coming here, and we see a huge buying delta, and we can see that the candle closed almost like purely bullish. Alright, but we are looking at the next candle, and right now what we can see is a pretty big delta shift from 1066 76. We can see that only 180 people are buying. So look at it this way: 1076 people are buying. The, but that's not the right way to say it. I'm sorry. Delta is just taking like it is just buyers minus sellers. All right. So if we I don't know how to say it in English, but if we do buyers minus sellers, we can see that there are 1,076 more buyers than sellers. All right. That means that buyers are should be a lot stronger. But then when we look at the next candle, that is not the case at all. We can see that from all those people we shifted into this. All right. So that means that even though there is a lot of a lot less sellers, someone is holding the price to go higher. So we can expect an absorption here. Another good sign is that the highest like place on the footprint candle will show that 0 people sold and some number bought. All right, that means that already all of the buyers that wanted to buy at this price are done. There is no more buying over here. So this is called, I believe, a zero print, and it is a very good sign of reversal and of absorption. So Right now, you see that there's a huge delta decrease. We put in a zero print, and even though there's more buyers than sellers, even here, the price stopped. The same thing you can see on Bookmap, alright? Big green bubbles, but price is not moving, price is staying, alright? But and this for me would not be enough for entering a trade, alright? This would not be enough for me to go and slap a short. What I wanna see is a aggressive continuation from sellers. And we would see that very perfectly here. So you see another zero print indicating that buyers are not are already bought out on this price, and we are coming way down and we see a huge delta flip, and that is just the thing I want to see for me to enter. From a thousand and 76 buyers we go into minus 450 buyers in 2 minutes, and that indicates that there was a huge absorption, and we can expect a sell-off that we can enter on. All right, so if we just quickly look at how it played out, yeah, we can see that this was a very huge sell-off, and we could have taken a lot of points from here. So that would be from 6,620 to 6,580. So that is like 40 points downwards. Alright, and this would also count as a continuation play because we already had an absorption here. Alright, but I just decided to show you this example randomly. So this is basically how I use absorption, and right now I'll just try to find this point on the other indicator, and I'll just show you how you see it on the indicator, because it is very similar to Bookmap. Just skip here so you can see it. This is the trade we were talking about, and if I open this indicator, we can see that right here we made a a like a buy bubble. Also, with this indicator, all of the bubbles that are created are would be pretty big on Bookmap because it does not make that many bubbles. Even the small ones would be very big on Bookmap. So take that into account and see. We made a huge buy bubble here. The same thing we would get on Bookmap. The same thing we read from the footprint, and we sell off. So I just wanted to show you how the indicator works and how can you see it, and yeah, so this is it. And right now I think I'll show you one or two trade examples from today, just to show you how to pair all of these together. All right, this is the trade I took on paper, and let me just show you how I came up with it. So this is the trade, 3.8 RR, so that's pretty good. So the first thing I'll notice is I'll mark out my 30-minute fair price. That is the thing I do first. So this is the fair price, this is the consolidation, and we are currently coming to it after this huge sell-off. Alright, here. Then I'll go into the 1 minute and see the weekly weekly fair price. So this is it, value area. We are just coming out of it on the top, on the value area high, on the fair price I marked out, and on the weekly. So we agree on both of these. When you see the VWAP, we are just coming to the lower deviation band. So here. So right now, I would I would expect it to traverse and cross the the 30-minute area, and I would expect it to cross the weekly one. So this is it, alright? This this is the thing I was targeting. I wasn't targeting any imbalance, so this would be an imbalance, alright, but only I only traded the in the range. I only traded in the weekly range. So this is it. You see, you could have traded it with PNF also. This is a consolidation on the 30-second. You could have traded it. This would be a fair value gap, and you could have traded down. But I find this more precise. So um, yes, this is it. VWAP, lower deviation band. Uh, I tried to find a bounce. Um, yeah, 30-minute fair price. I tried to find a traverse, the cross, and the weekly. I tried to find a cross. All right, all of these you have to take all of these into account, and also I checked on the footprint. All right, so this one I'll just do it like this, and yeah, here. All right, so I'll just stretch it out a bit so you can see here. Pa pa pa. Yes, this is it. So when I go like this and I show this too. Alright, so we can see that we are coming out of it and we are looking to short because we want it to cross the value area of the weekly and the 30-minute, and we want it to bounce off the deviation band of the VWAP. Alright, so this is it. We are looking at the footprint, we are looking at the delta. We have a positive delta coming into this, and so we can see we have a huge buying here, 152, and we are buying, but price is not really moving. Or is it moving? Yeah, it is a little, but it is just coming out of this small consolidation. But after this we put in a zero print, you see, and we have a huge downside delta. We have a delta flip from 152, we have a negative 161. We put in a zero print and we have a delta flip. We flipped it completely, 0 0. We came down and closed below the previous candle, like right here. So after this candle, after this 1 minute footprint, I would have sold, alright? Or I sold on my paper, but not on my fund. So right here on 26 or something like that, yeah, 26 right here, I would have sold and targeted this low, and it worked out perfectly. Alright, so this is the trade I took. Also, you could have traded this move, but targeting this wouldn't be an option, or it would be an option, but it would not work out. You would get stopped. My stop loss was just above this. Oh, yeah, this is the previous. I didn't mean to show you, but yeah, my stop loss would be just above the zero print right here, 31.75. 31.75 was here. All right. Oh, let me just 31 point something 75. All right, this would be my stop, and I just targeted this low, not this low, the value area low. I'm still used to the ICT concepts and saying lows and highs. I'm not trending that anymore. So this is it. You could have also taken it with PNF, but if you did, you would have targeted either the 3 level, it would have worked out, or the 4 level, it would have worked out also. So you see, PNF model is working, but I don't know, man. I just You can also like use it. You see, you can also apply it right here. So I'll still give the credit to the PNF because it would have worked out, but this is just the confluences I used. And alright, that is just the trade. Also, after that, I wanted to show you, yeah, right here, we came over to the value area right here, and we would expect it to act as a resistance point. I will not show you on the footprint because it is too much finding things, but right here we found it as resistance 1, 2, 3, and 4 times, and I would expect it to find as a resistance for the 5th time. Alright, I was looking at the footprint and I was ready to take it on my funded that I bought yesterday or today, maybe. Yeah, today. Alright, but I did not do it because on the footprint chart we put in a zero print right here. Alright, this was a zero print, but then we didn't see the delta flip. We didn't see the delta flip, so even though it looked like an absorption at first, I did not take it because even though we saw kind of an absorption here, we didn't see the delta flip and we didn't see like another zero print. Alright, so this is the trade you could have avoided. You could have avoided losing this, and I did. So this is just an example, but this is the trade I wanted to show you. This is the trade I took, and it is a good trade, and I just show you all the confluences. Alright, so this was just the like a quick trade example, and if you want I'll show you another ones and just text me. So alright, so this is it. Alright, so these were like the concepts and things I use in my strategy. I think that was a pretty good trade example. If you do not understand something, you can always text me. I can either make another video or we can call or text and I can explain it to you. I plan on doing some trade recaps in the future, just to show you my trades, maybe give you a little direction that you can go in. I understand that you like the bootcamp, and you can trade as C. Bracken does. He is a much better trader than me, and he is more experienced. So I think you would be better off with sticking with him. But if you ever want to try something new or look into footprints, we can do it together. So this was it. This was the video, and thank you for watching it. And bye for now, and talk on Discord and Instagram.